Well, those visuals coming in of our finance minister, all set. In the next couple of hours, we'll be hearing from her. 2 hours, 29 minutes to go. So we'll get to that in just a bit. For the time being, let's get our research team back. They're standing by with CNBC-TV18's top list of stocks for the day. And let's start off with Ekta. Ekta, tell us, what about Sun Pharma? How are the numbers?
Thanks for that. Well, yes, it was a good set of numbers which came out for Sun Pharma on a Saturday. So the revenue was up around 13% better than expectations. The EBITDA also was up around 23% with margins of around 32% and a profit which came in higher than what the street was anticipating. What really led the growth this time was India, which was up 16%. Street was anticipating 9 to 10% growth. We had US, which was up around 6.2% year on year, and emerging markets, which was up 28%. Global Innovative Medicines, which basically has their branded portfolio, Q3 sales stood at around $423 million, included milestone income of $50 million. Even X of that, it was better than expectations. So I expect the stock to be in the green.
Oh, that's good to hear. That does look like a bright set of numbers. Vivek, how was NTPC?
Good morning. Well, NTPC, remember, FY26 has been a year of muted power demand, and in line with that, the weak power demand led to weak power PLF trends. On the back of that, revenues actually fell by almost 1.8% on a year-on-year basis. EBITDA managed to stay flattish. EBITDA margins inched higher by 60 basis points and profitability up by 5.5%. The good part is in the conference call, the management said that December and January, power trends are inching up higher. Key to watch out for today, of course, will be any details as far as the Shanti nuclear package is concerned, thermal power as well as the DISCOM package, if there is any commentary on that.
Okay, all right. Thanks a lot for that, Vivek. Hopping across to Gaurav. He's here to tell us about Chola Investment as well as IDFC First Bank. Gaurav, take it away.
Well, let's talk about Chola Investment. If you look at the numbers, inline set of numbers is what we saw. In fact, we saw loans growing at around 21% in line with the management guidance, and disbursements also grew at 16%, again in line with the management guidance of 15 to 20% growth in this year itself. Other than that, if you look at the net interest income, we saw 24% growth and profit that grew almost by 18.5%. When it comes to the ratios now, net interest margins, now that has expanded by 10 basis points, and this is because of the interest cost which is coming down, and at the same time asset quality also saw some kind of stability. Credit cost remains stable. Now, what is important is that the management con call, which is going to happen on Monday, so that is a key thing to watch out for. Other than that, when we look at IDFC First Bank, now the numbers look actually good. Net interest income grew by 12%, while profit increased almost by 48% on a year-on-year basis. Now, this translates the net interest margins growth of around 17 basis points. This was actually a positive surprise for the street because street was not expecting this kind of jump. Remember, this jump is coming up from 12 basis point of benefit coming up from the cost of funds itself. So it is a structural story. Other than that, ROA is now they are also at 0.5%. Remember, the management is saying they will achieve 1% ROA by FY27. Loan book growth and deposit, that also remained healthy. A key thing to highlight is that the deposit growth was higher than the loan book growth, again in line with the management strategy. So all in all, good set of numbers, and the management's commentary also remains strong for IDFC First Bank.
Okay.
Well, actually, can we keep all our research team on air because they're looking so natty today? And the nattiest of them all is Nigel Jindal.
Well, that's right. Jindal Steel, that's the one, in fact, that I'm going to be keeping an eye out on. And the numbers looked a little bit softer in comparison to expectations because the top line, that was aided by better volumes. But the softer than expected operational performance. A couple of factors played out here. Production and sales number, well, it came in at around 2.5 million tons. That was up by close to around 22% on a sequential basis. But there was a margin miss because realizations were down by around 8% on a sequential basis. The raw material cost was effectively higher because of the iron ore that they purchased from Odisha, where prices were relatively higher. And the new blast furnace startup cost, well, that's what weighed as well. The profit number as well got weighed down because higher finance costs, higher depreciation costs, coupled with higher taxation. Yes, Q4 will be better, but I think for starters, the stock opens up in the red. Let's hop across to Sudarshan Joe. He's joining in to tell us about Bajaj Auto. Sud, how are the numbers?
Good morning, Nigel. So for Bajaj Auto, you have to factor in two things. First, numbers, and second, outlook. So numbers were largely in line, except the margin which has come in sharply higher, 20.8% versus our expectation of around 20.5 to 20.6%. But if you take a look at the outlook is looking very strong. So overall, all the numbers, revenue has increased by 19%. EBITDA too has seen an increase of 23%. Now coming to the outlook, company is saying in Q4, domestic industry is likely to see a growth in the range of 12 to 15%. And company is going to outpace the industry, especially in 125cc plus and 150cc plus segments. And how will it do that? It's likely to gain the market share by launching the new Pulsar. And there can be 7 variants of new Pulsar over the next 6 to 7 months. And now, if you go to export segment, company is saying that in FY26, exports top line is going to be the highest ever in dollar term. So considering both numbers and the outlook, I'm going with green for Bajaj Auto.
Indeed, Sudarshan, and congratulations on becoming a father yet again. 1 week ago, congrats to you, the entire family. Give that little one a big hug from all of us here on CNBC TV18. And great to see you back just 6 days after becoming a father. Wrap up today and then go back to the baby. Congrats, Sudarshan.
Thank you.
All right. Well, let's hop across to Sonal. She's here to tell us about Gail. Sonal?
Well, weak numbers coming in from Gail. It was a top-down miss. Their revenues declined. Even EBITDA was down 17% on a quarter-on-quarter basis, leading to a margin decline to 7.8%. Profits were down by 28% as well. And it was led by their gas marketing segment, which is the biggest segment for them, where it was a decline on a quarter-on-quarter to 853 crore rupees versus 1300 crore rupees. Petchem losses actually widened. This is at a time when the industry is seeing recovery in petchem margins. So going with the red on Gail, they have a conference call tomorrow. So we'll get more details on what really went wrong this quarter.
Okay, well, that's as far as Sonal is concerned. Do we have Ekta again? Okay, we'll get back to all our guests in a bit. We have some more stocks to handle, but we will come back to it later.